Good evening, everybody. Welcome to tonight's launch webinar for TRADEway's newest online course, Barter to Currency, A Brief History of Money. Guys, this has been a long time in the making, and I've been really excited to share it with y'all. And I appreciate you giving me the time this evening for me to kind of introduce it to you guys a little bit. I know you guys have seen some preliminary emails. Y'all have seen some, marketing pieces and things like that get tossed around, including the launch announcement this morning. But I thought it would be a good idea for us to just simply get together, talk through a few things. Let me explain what the course is about, and more importantly, what the purpose of even having this course is, as well as answering your questions. I would like to start by just giving you a brief, just kind of a background introduction to this course, what it's all about. And again, I'll be ending with answering the question, why is it so important in the first place? How does it play into my investing in general? And how is it going to lay that solid foundation for my precious metals investing specifically? But if you've seen any of the preliminary emails or YouTube videos or anything like that, you know that I've also been talking about the fact that this is applicable kind of across the board, because the purpose of it is to give you a better understanding on how money works, how your money works, and how it got to the point where it is today. First off, the course is called Barter to Currency, and the subtitle is A Brief History of Money. So obviously, this is a massive topic, and this is one that when I first started doing the research and development for many, many years ago, a little over a decade at this point ago, it was certainly one of those things where it was tough figuring out where to start. And as I started digging into the primary sources, there was definitely a little bit of overwhelm at the onset. Now, anyone out there that's ever been interested in this topic, y'all may have kind of done some of that preliminary research yourselves. You may have, purchased a couple of books, maybe invested in some resources, dove into it, and got enough of a handle on it where you felt pretty good about your knowledge on the history of money in general, but perhaps you still had some unanswered questions. This course was designed to answer those unanswered questions. Basically cover all the high points that come into play with regard to wondering why things work the way they work. Why do people even have a desire for precious metals investing? Why has that industry blown up to the degree that it has? And even why is that particular industry disparaged in some cases, and gold and silver investing kind of made fun of? It's kind of tossed aside and given the prepper label in many cases. Why do all these things happen? Well, the history of money, and specifically the high points that are covered in this course, I believe answer a lot of that. So as the title suggests, it begins by talking about primitive barter, so that we all have kind of the same well-rounded starting point. And then the evolution from that all the way to current modern day electronic money, fiat money. How did that evolution take place? And what are the things within that evolution that are most important to me as an American individual? What are some of the things that have happened in recent decades that, again, have played a part in putting our money where it is now, getting it to the point where it is now? And what does that mean for me? So all of these things are covered in this course, I believe. It lays that solid foundation, as I've kind of teased a couple of times, to your precious metals investing specifically, but also just your knowledge of money and how it works in general. Some of the things that we talk about in this course as it relates to U.S. monetary history, because we do start, again, with barter, and we go through a lot of the global, the international progressions that led us to where we are today. We do hone in on aspects of American monetary history that, again, play a huge part in why our money is the way that it is today. So we start with the inception of the Federal Reserve and why it's even around, why it began in the first place, and basically why Congress relinquished its power to have authority over the value and in maintaining the value of America's money. It begins there, but then it quickly progresses from that right into the Great Depression and the things that FDR specifically did to lay the groundwork for first ending the gold standard, doing what is generally perceived to be the Great Confiscation Act. I use that term somewhat loosely, and I define all of that in the course itself. When the government confiscated citizens' gold in the 30s after having cut the official classical gold standard that had prevailed for a number of decades leading up to it. And then some of the things that happened after that. It goes all the way through, talks about the Bretton Woods system, the great debasement of U.S. coinage in 1965, and of course Nixon closing the gold window in 1971. By the time you get to 1974, you have Gerald Ford legalizing gold ownership again for the first time since the 30s, and then everything changed in the metals industry. So all of these things are talked about in detail in this course, and why they play such, why each of those things, why each item on that progression chart, why each item within that evolution of money plays such an integral role in your money today, and what it, again, means for you as an individual, as well as what it means for you in your family. So that is just a quick synopsis of what the course is all about. Of course, it ends with talking about why we don't need to be afraid of the vulnerabilities that fiat currency bring inherently to the monetary system. We do talk about that. We talk about why you don't necessarily need to have fear about that. But we do address all of the reasons that do play into its vulnerabilities and what you need to do about it. It kind of provides you with answering the question, number one, why invest in precious metals in the first place? And number two, what is the antidote to all of the issues? If you think about it, the dividing line between your normal person out there that is somewhat interested in gold, perhaps they've seen the infomercials, perhaps they've received the mailers in their mailbox, perhaps they've even visited a few websites from some of the bigger dealers out there. What's the dividing line between those people that just have this general sense like they need to be investing in metals, and the person that is doing it very intentionally, doing it for a purpose, doing it to fulfill a certain purpose, and that has a foundation from which all of the strategies they employ are built upon? Well, the dividing line is the history of money, having a good grasp of it, having an understanding of it, and knowing what happened 100 years ago and what happened thousands of years ago, in some cases, plays such an important role in why you need to be considering precious metals investing in the first place today in the 21st century. So with that being said, again, our time is somewhat short this evening. We have about half an hour allotted to us to talk about the course, and more specifically, more importantly, to get your questions answered, get some answers to you guys. So I'm getting everything pulled up on my screen here one more time. And for those of you who haven't yet sent a question in, you can use either the Q&A feature or the chat feature to send in a question about the course or precious metals in general, and we can see whether or not this course will be the answer to that question, or whether or not it covers some of the stuff you guys are looking for. I believe it will. It's pretty comprehensive, even though it is a brief history of money. It's comprehensive in the fact that it covers a whole lot of the high points, as I was talking about just a minute ago. So go ahead and start sending in your questions. In the meantime, let me jump into some of these questions we got right off the bat and start answering these, because we have some really good ones on the board already. And so as I answer these, which, by the way, I believe some of these questions will be pretty applicable to our whole group here, as y'all listen to these, as you listen to the answers, think of some of the questions you may have for me and send them in there. And then after we're done answering the questions, after we're done with the Q&A, we are going to talk about how you guys can begin with this new course, Barter to Currency. So right off the bat, someone asks, how will this course specifically help my investing? Now, Jake, you say investing, and I assume that you're referring primarily to precious metals investing, but I can answer it somewhat broadly just in case the sentiment there is beyond just metals. The answer is it can help your investing by equipping you with a robust knowledge of how money came into existence, how it was discovered, but how it's supposed to act in an historical context. In other words, one of the most important things we cover in this course is what are the needed properties of money. After you cover that, it begs the question. The follow-up question then is, okay, does my money meet all of those properties right now? Does it meet all of the criteria? If the answer is no, then all of a sudden you need to start thinking of some solutions to how to fix that, at least for you on an individual level. Not that it's all that easy for us to go out and reform the monetary system, but we can be taking steps as individuals to making it better, making the experience better, protecting our wealth, preserving our wealth, not just for ourselves, but also for the next generation. So how will this course help your investing? It gives you a terrific, let's just say it gives you a good backbone, for lack of a better term, when you go out there and you start studying finance in general, and knowing why things work the way they work, like I said before, and things like that. The reason I believe that this particular course helps with your precious metals investing to such a degree is I personally believe that precious metals, gold and silver, physical bullion, is the answer, is the antidote to a lot of the problems that are going to be unearthed in this course. So as you go throughout the course, you're going to see, as each chapter flows into the next, you're going to see that a lot of problems are presented. And so what is the answer to those problems? Well, I can cut to the chase and give you the answer now, because the main course is presenting what the problems look like and how they work, how they operate, so that you do understand why you're doing what you're doing. If you're on this webinar this evening, you may already know, yes, I know I'm going to go buy some gold and silver at some point. Maybe you already have in the past and you're thinking about accumulating additional metals, increasing your metals reserves in the near future, but you might not even know why you've been doing that or why you will continue to do that, at least beyond just the surface level reasons, like, yes, inflation's high. Yes, we have a corrupt U.S. government. Yes, the Federal Reserve does all kinds of things on a whim, seemingly, and they make a lot of bad calls, as they did with believing inflation was transitory initially, and with a lot of the things that they did in the wake of, post-pandemic and things like that. So there are all kinds of reasons on the surface level that a person may look at that and think, well, I've heard in the past that gold might be an answer to these things, so I'm going to go buy some gold. But if you are going to incorporate precious metals in the long term, not just in your portfolio in general, but for very specific purposes, perhaps even for the betterment of the generations to come in your family, then it's good to understand why you are doing that and to give you some reasons to make you confident to continue to do that. So in that sense, especially in the context of precious metals investing, Jake, that is why this course will help you in that sense. With all of those things in mind, this course will help you have that grasp, that deep understanding of why you need to do these things in the first place. Okay, so Susie, you asked, does this course cover any strategies? Well, that's a good question, especially considering that the large majority of our courses do. And the answer is no, there's no specific strategies in this course, but let me explain why, because that's by design. The reason why this course doesn't have any specific strategies, which our other precious metals educational courses do, is because this was designed to be that foundational piece for all of our students out there, to build that confidence, to give you a sense of confidence for this purpose, so that you can avoid what we like to call here at TRADEway fear-induced urgency. So this fear-induced urgency is one of the driving factors within this particular industry. It's what allows so many dealers out there, so many sellers of precious metals, to exploit the clientele that they have. And from that point on, selling them things that, in our opinion, and our opinion, by the way, is well substantiated here. It's not necessarily just a feeling, but I can easily substantiate why we believe the majority of dealers out there sell you things that aren't actually to your best interest. And so before you get into strategies, before you get into learning let's just say the nitty-gritty behind precious metals investing, which we do cover in ensuing courses, we first want to give you the confidence to relieve some of that fear-induced urgency so that you can understand how the metals industry relates to the history of money and what some of the answers can be for why investing in metals, in the first place. So again, Susie, no strategies in this particular course, but it's by design. We want to give you that solid foundation first, and after that, we have plenty more precious metals education that follows. This course is the prerequisite for all other metals education that TRADEway has to offer that does include strategies, that does include a lot of the how-tos, how pricing works, how the bullion industry works more specifically. how charting and technical analysis plays into all of this, because yes, even if you're buying physical coins and bars, things like technical analysis, market tone, fundamentals still play into all of it. So all of that is around the corner. This course, Barter to Currency, is intended to give you a solid foundation. Let's see here. A lot of great questions so far. Thank you for that one, Susie. Robert here asks, can my kids learn from this course? Yeah, Robert. Can my kids learn from this course? Great question. I'm trying to remember, but I think in some of the marketing materials that we put together in the lead up to this course being released, and some of the emails and things like that, I think I even mentioned how this course could be utilized as kind of like a homeschool, like a supplemental homeschool course or education there. Because this was designed for anybody. The history in general, of course, is every man's subject. Everybody can benefit from having a deeper understanding of how things have played out throughout the veins of history. And in this context, specifically, the history of money. And so, yeah, this material was designed so that any of our students can understand it. And it was designed to be kind of a gateway into the world of precious metals investing in general. Just a really quick backstory as to how this material came about in the first place. When I began the research and development phase for TRADEway precious metals over 10 years ago, the place that I started was doing my own research into the history of money. And originally it was for the purpose of just giving me that foundation that I am now wanting to give you guys through this course, so that I had that confidence in understanding how the metals industry functions, why it functions the way that it does, why is it the answer to fiat money, why is it an answer to inflation and things like that, some of these problems that we have today. And so the research and development phase began here. It began with the material that I am now delivering for the first time ever in an online course to you guys. It is the kind of the product of all of that. So going back to some of my primary sources, we're talking Adam Smith in The Wealth of Nations, Joseph Harris in his essays upon money and coins. And then from that, of course, even our founders had so many good, so much good dialogue and discourses and published materials on monetary systems and things like that. And then you go way back in the ancient times and you learn about how you learn the relationship between intrinsic value and subjective value, and why is it that certain things act as currency to certain civilizations and why certain things don't. What are the needed properties of money? You discover these things, and it fast forwards all the way into not all that long ago in U.S. history, things like FDR, with the ending of the classical gold standard, the confiscation, as it's popularly known as, of course, Bretton Woods, the Great Debasement of the 60s, Nixon closing the gold window, the King Dollar period of the 80s. Of course, the 2000s was a really strong period. The 90s and the early 2000s was a relatively strong period for the dollar. And then you get to the Great Recession, you get to the pandemic, you get to a number of things. All of that, none of it is arbitrary. None of it is isolated. It is very much a cascade of things that have transpired. So as I started discovering all these things for the first time in a broader historical context about 10 years ago, I was like, I want to share this information with people, but I want to reduce it to where we're covering the bare essentials to lay that foundation for you guys, and then flow into the actual strategies and the further metals education. So, Robert, again, can your kids benefit from this? Absolutely, because I designed it to where families can consume this material, learn together, and know why they're doing what they're doing, know why they are considering investing perhaps a substantial part of their life savings, their retirement, whatever it may be, into something as seemingly archaic as gold and silver, physical gold and silver, and how that can benefit the next generation and the one after that, and even the one after that, because it has that historical precedence there. So hopefully, that was kind of a long-winded answer to a pretty simple question there, Robert. The answer is yes, your kids can learn from it. But hopefully some of the backstory there fleshed it out a little bit better for you. Let's see here. Chris asks if I've already read books on the history of money. Will this course teach me anything new? And Chris, great question. I answered that to some degree in the previous answer, coincidentally. The source material for this course is very robust. I mean, I mentioned a minute ago that started with a lot of the primary sources on just economics, monetary systems, and things like that, from Adam Smith to Joseph Harris, to Milton Friedman and John Maynard Keynes, and a number varying schools of thought when it comes to economics. And then fast forward, I mean, there's some really good contemporary writers in these subjects. I do think that Jim Rickards has some really wise things to share in this field. Steve Forbes has some wonderful works on money, how it operates, the vulnerabilities of fiat currency. So there's some really good stuff there. There are a lot of different good places to start. Felix Martin's History of Money is a great place. Jack Weatherford's History of Money is an awesome place to go. So all of these, all of the ones that I just mentioned, plus more that I can't think of off the top of my head, have played into the end result, the end product, the reduction of this super broad topic, which is the history of money, and has played into this course. Some of those things some of those sources that I just mentioned are cited in the course. And so, yes, the answer is I believe you will learn quite a bit from this course, even having read some books on the topic. Now, of course, you'd have to tell me which books you've read, how many you've read. Depending on that, I could probably give a more definitive answer. But at the very least, I think this could be a great supplement to any background education you have in the history of money, economics, and monetary history and things of that sort. So, great question. Hopefully that cleared it up a little bit there for you. Let's see here. Paul, thanks for joining us this evening. You said, do you think our currency will or could ever return to a gold/silver backed currency in the U.S.? I've received this question a number of times, Paul, and I always give the same answer. Number one is it could happen. All you have to do is get the numbers right. So are we going to ever return to a 35-to-1 exchange rate between gold and the dollar? The answer is absolutely no. In fact, it was that thinking, thanks to Winston Churchill, who happened to be the Chancellor of the Exchequer back after World War I. He was essentially, to us, what would be the head of the Federal Reserve before he was Prime Minister. And even against the wishes of John Maynard Keynes, he decided, you know what, we're going to go back to the original gold to dollar exchange rate. We're going to go back to the gold standard as it was prior to the war because I want our currency to be strong. And John Maynard Keynes was like, whoa, we just circulated a lot of paper currency to fund this war. And so the ratio is way off. It's going to be skewed, and this will send us into the Great Depression, into a Great Depression. Lo and behold, that is exactly what happened. And the results of Great Britain going in that Great Depression ended up playing into our Great Depression later. By the way, just as a quick side note, gold is not the reason for the Great Depression. It was bad monetary policy that led to the Great Depression. We were on a gold standard, yes, but that was not the culprit. So sometimes fiat money proponents will blame gold for the Great Depression. I'm like, it wasn't their fault. It wasn't gold's fault, that is. It was the erroneous monetary practices of our leaders at that time. And so the first answer, two-part answer, is you could technically do it as long as the price is right. The exchange may be like $50,000 to an ounce of gold or something like that, maybe even larger than that. But it could happen. You'd have to run the numbers, and really smart economists, a lot smarter than me, would have to figure out what the sweet spot is for taking our currently circulated money supply. How much is that exactly? And to what number could we attach per ounce of gold to be on a gold standard again without sending us into a deflationary spiral or another Great Depression? So it could happen. But more specifically to your point, or to your question, Paul, will it happen? And the answer for me, and of course this is my opinion, but for me it's an easy no. And why is that? Well, a gold standard is a terrific way to hold men accountable, to hold economists accountable, to hold bankers accountable. Go figure. God put gold in the crust of the earth, and it has all of the checks and balances within its natural properties that you need for a sound monetary system to avoid some of the pitfalls of fiat money system. Again, go figure. It's not a coincidence. It was very much by design. However, then you have men come in to the picture and they get a little bit of power. They get a little bit of more power. The progression of the Fed from 1913 through the 30s is really interesting, certainly through the 70s. And so all of a sudden you get to 1971 and you have a wholesale cut of the dollar with gold, and all of the power, all of the checks and balances are moved from this natural element that comes from the crust of the earth to the hands of the men and women that run the Federal Reserve. And it's been like that for 5 decades plus at this point. That is a lot of power. And I don't think that power will ever want to be relinquished. What'll end up happening, I believe, is we will have, I'm not going to call it a monetary collapse. Again, I think that is one way that this industry can exploit a lot of people that are afraid of certain things. I'm going to call it a monetary reset. That doesn't necessitate a collapse, but what it does mean is that a lot of power, there can be a lot of changing of hands, and it can leave citizens vulnerable depending on what currency they're using. And so I don't think that power, Paul, will ever be relinquished again. I don't think we'll ever be on another gold standard. I don't think our coinage that we carry around in our, basically our pocket change, will ever have real silver in it again. It shocks me to some degree that that was the case even as recent as 1965. But unfortunately, I believe those days are over for good, especially with the advent of cryptocurrencies, the blockchain technology. The sky is the limit to some degree with reining in on the free-floating fiat currency issues, but I don't think that the central banks are ever going to go to gold and silver to solve it. That leads to a follow-up question, of course, and that is, why are central banks buying gold then? I'll let you guys think about that for a little bit. This is something that we cover quite a bit in our prospector webinars and some of our other education. A lot of our veterans out there know the answer to that question, at least based on our analysis of the situation. But if you've never thought about that before, it's worth pondering. If central banks love free floating currencies to the degree that they do, and if they disparage things like physical gold and gold ownership to the degree that they do, why is it that central banks then are buying physical gold? It's worth thinking about, and it may even shed some light on the question, why should I be buying gold? So that's a great question there, Paul. Hopefully that was an answer that you can approve of, and they covered that just a little bit. A huge topic there in and of itself. Could we ever go back to a gold standard? It's really interesting thought experiment. Dominic, you say, are the spot prices of precious metals, specifically gold and silver, based on supply and demand, or are there other factors as well? The quick answer is yes. It's absolutely a supply and demand issue. It's interesting, Dominic, because if you parse your question a little bit, and you start thinking about the distinction between spot price and the physical metal, the physical bullion industry, all of a sudden you run into some interesting issues, because the supply and demand trends that you see on the spot price charts are not indicative of the supply and demand trends in the physical realm. And so you may be seeing spot prices at new all-time highs, like we see right now. It reached a new all-time high today. Gold did. Yet you can look at you can look at what we would call the premium data for the physical metals, and you might see that going down, indicating that demand for physical precious metals is down for whatever reason. And so the short answer is yes, spot prices do show you supply and demand trends, but the question is for what? It's not always supply and demand for physical, but rather what the big boys are doing out there, what the institutions are doing out there. How much of their money are they moving? Are they reallocating from perhaps some currencies, bonds, even the stock market, whatever it may be, into gold? What is the reason why they're doing that? Is it inflation fears? Is it because the Fed is cutting rates? Is it because of things that are happening overseas and the escalation of warfare, geopolitical factors, and things like that? Those are the things that drive a lot of the supply and demand for the spot price. But again, it doesn't necessarily mean it's driving demand for physical coins and bars. Are there other factors? Certainly. There are a number of factors that play into Oh, I see your question here. Is it just supply and demand, or are there other factors? I would say it's simply put a supply and demand issue, and there are tons of factors that play into why demand may be going up or down. And so demand for gold right now, for example, treasury yields are low. And so gold is a non-yield bearing asset. And so if yields are low, treasury yields are down, it makes sense to move over to a safe haven asset like gold because there's no opportunity cost for those big boys. Geopolitical considerations, like I mentioned, escalations in war overseas, Fed rate cuts, real interest rates, what's going on there. All of these things play into why you may see gold going way up, creating new all-time highs, or going down in the coming days. So a little bit of a loaded question there, Dominic, in a good sense. Hopefully I was able to cover that enough there for you. But that is a great question. Of course, if you have any follow-up questions on the supply-demand dynamics of gold and silver, feel free to reach out at preciousmetals@tradeway.com. Eric, you say, I'm very excited to learn about the new course. I'm curious, will TRADEway ever teach courses about trading metals and or currencies? Great question, Eric. I'm never going to say never. I will say that there are things in the works that have absolutely no definitive timeline, but that I hope will certainly make their way into the TRADEway catalog, mainly with regard to trading metals, less currencies. Currencies is a little bit interesting because you don't necessarily have all three legs of the trading table like we teach with our stock and options trading. You have technical analysis, obviously, but fundamentals just work completely differently. And in the sense that with regard to how fundamentals work for stocks and options, it's non-existent for Forex trading, for currencies and things like that. So really, at best, you have two legs of the trading table, not three. So currencies is something we don't necessarily have on the horizon, but I will say just we have had our eyes on some particular courses, developing particular courses that involve utilizing the TRADEway system, but in the context of trading metals, not necessarily the physical, but the paper contracts that we see on the commodities exchange and things like that. No definitive timeline, but you asked, so I figured I would just go ahead and throw that out there. Let's see here. So how do you think this compares with Bitcoin or other things with no foundation? I think I know what you're getting at there, Terrell. And the answer is, first of all, great observation. Second of all, there are a number of parallels. Well, I actually won't say a number. I will say there are very few. To my understanding, there are very few parallels between cryptocurrencies and gold and silver, precious metals in general. The main one being, of course, that they both act as alternative currencies, so you have that in common. And the second, and this is an important point, by the way, the second parallel, and I think in my opinion, it ends about here, and then at that point they branch off and they're very different assets. But the second important parallel is that you very much have a sense of independence with the ownership of something like Bitcoin compared with something like the dollar, just like you have with the ownership of gold as compared with the dollar. So in other words, when you own the keys to your Bitcoin, that's yours. It is private property. It's independent private ownership to the nth degree. And so that's one of the things that people really like about Bitcoin. Not all cryptocurrencies are they don't all operate like that. They're not all created equal, but you said Bitcoin, so I'll just use that particular example. There is a great sense of not only having an alternative currency, but having it, having an independent kind of individualistic ownership of a thing that does have perceived value. It certainly has subjective value attached to it that separates yourself, your Bitcoin ownership, from the dollar. Now, here is the kicker. I believe that gold and silver have accomplished the same thing in a more robust fashion and with a better foundation, to your point, for millennia. And so, unlike Bitcoin, we have all of human history. Gold is talked about in Genesis chapter 2, for crying out loud. It was there before it was even needed as currency, and yet God called it wealth in the land of Havilah. The word good in that verse literally means prosperity. It means wealth. And so you have this thing, gold and silver, that has historical precedent and that foundation that we've been talking about and that you referred to here, Terrell, that gives us that sense of independence, of private ownership of a thing with intrinsic value, with value outside of all other currencies that can't go bankrupt, and all of these awesome things, all of these awesome benefits that we get to take part in, and somewhat easily. It is very easy right now to attain physical precious metals. We're at new all-time highs with gold, so it's more expensive than it's ever been in US dollars. But that doesn't mean it's not going to pull back. It's going to revert to the mean eventually, and silver is not all that bad either. And so, relatively speaking. And so, there you go. There are some comparisons, Terrell, but in my opinion, not enough to favor Bitcoin over precious metals if your main objective is to preserve your wealth and to have an alternative currency that has stood the test of time. Timothy, you ask, so what is cryptocurrencies based upon? The air? Well, that's a pretty good question there, Timothy. And some of them, the answer may be yes. With something like Bitcoin, and of course, there's the world famous white paper on how all of this works with blockchain technology and things like that. You can Google it and find it super easily. But there is a finite number of these quote unquote coins. And so that actually solves one of the problems with fiat currency, and that is it gives you one of the properties of money back, and that is that it has to have a finite supply. If it doesn't have a finite supply, then again, it can just float away. It's not tethered to anything, and your purchasing power is gone one day. Maybe over the course of a few months, maybe the course of a few years, but boom, within 12 months, 8% of your purchasing power is just gone. And it's because there's not anything anchoring fiat currency down. There's no finite supply. And so Bitcoin, as one of maybe a few other crypto examples, it does solve that issue. It has a set supply, and because of that, it does give it that perception of value there. But aside from that, what is it based upon? It is electronic. It is based on the grid. There's a lot of counterparty risk, in my opinion, when it comes to Bitcoin ownership, the ownership of any cryptocurrency. A lot of you guys may very well invest in physical gold and silver, and put it in a depository, and that's perfectly fine. But many of you may want to take possession of some of those things, and you have a tangible asset to rely on as an alternative currency, as well as simply something to preserve your purchasing power with in the long term. So if these are your objectives, go with something that has stood the test of time versus a new experiment, such as cryptocurrency. I could probably spend more time on answering that, Timothy. For the sake of time, I'll move on, but hopefully that shed a little bit of light on there for you. And by the way, guys, just to bring it back to kind of the topic of this evening, barter to currency, interestingly enough, the assumption behind a lot of these questions is, we're comparing gold. How does that compare to cryptocurrency? How does it play in this context and that context? There's an assumption behind a lot of these questions that is gold and silver is valuable. Gold and silver can be the answer to a lot of these problems. And so a lot of you guys have that assumption, but why is that? Why does gold solve all of these problems? Again, barter to currency, the new online course, does cover this. It covers it in detail, and I'm excited for you guys to get to dive into it yourselves. And you can click the link that is in the chat, and you guys can go do that. You can take part in this brand new course, TRADEway's newest course for the first time in a while, the first metals-related course in a good while. Let's see here. Larry and Fran. Cryptocurrencies are mined in the sense that there's a process for producing unique core items of the currency, a Bitcoin, and that process results in a scarce item. Yeah, so you're kind of answering the question along with me there, Larry. It's scarcity plays a huge part in the perception of value that Bitcoin and maybe some other cryptocurrencies have. Not all of them have that scarcity factor, but Bitcoin certainly does. That was one of the reasons why it was created in the first place. But that is some great stuff there. Timothy, you had a follow-up. You said, thanks. So I guess crypto is like the dollar, not really based upon anything tangible. Well, yeah, it's not based on anything tangible. It's different than the dollar in that there is a scarcity factor, and that it is decentralized. So you don't have a central bank controlling the value and the supply and demand of the currency. It's decentralized. So there's two positive factors that Bitcoin brings to the table: decentralization and scarcity. But again, these are things that aren't unique to Bitcoin or cryptocurrencies. These are things that have been answered by gold and silver from the beginning. And so it all comes back to your objectives. Is there potential in maybe trading cryptocurrency? Sure. I'm not going to say that there isn't. I'm not going to go so far as to say you just need to forget about all of these things over here. I'm just trying to bring it back to, what are your objectives as an individual investor? What are you trying to do? Do you care about the preservation of your purchasing power? Do you care about fighting inflation in the long term and having a steady inheritance to pass on to the next generation in the one after that? And so if your objectives fall into some of those categories, and maybe a few others I haven't named yet, then physical gold and silver can solve those issues, even though there's a lot of kind of pomp and excitement surrounding cryptocurrencies in this idea that all of a sudden it's just as good of an alternative currency as physical precious metals are and things like that. So great questions there. Let's see here, Terrell, you had another question in the Q&A box. They use dollars to convert, which is very inflationary for us. I'm not quite sure what the context of that point was there, Terrell, but yes. So when it comes to inflationary problems with the fiat currency, the circulation of it and, the term is elusive all of a sudden, but the circulation of fiat currency, as that takes place, the velocity of money, that is the term I was trying to think of, as the velocity of money increases, it certainly creates inflationary pressure, and that can happen as dollars are released into the economy. That can be by going out and, I see your follow-up here, selling Bitcoins, or even going out and purchasing thousands of dollars worth of gold. That, of course, goes to the dealer. They use that to cover their business costs, their overhead to run their business. That flows into other aspects of the economy. So there's a lot of these offsetting things that are happening that contribute to the velocity of money and things like that. Let me see here, Frank. What would be the follow-up course to this course? Great question, Frank. So the follow-up to barter to currency, this is a great place to start. Barter to currency gives you that foundation. However, after you have completed that course, what's next is actually what I call our flagship course here at TRADEway Precious Metals. And that's a course called Protect Your Future. That is the one that dives deep into all of the strategies, how pricing works, the differences between spot price and premium, a number of these really interesting dynamics that come into play in the metals industry. And so we'll say that barter to currency lays the foundation, and then protect your future is kind of where rubber meets the road to some degree. And all of a sudden you get a very detailed understanding of the way the physical metals industry operates, how to benefit from it, how to use it properly and not be taken advantage of, how to get the best prices, how to be a cost-effective investor, how to use technical analysis in your favor. Not a lot of people think about the fact that before they purchase physical gold coins or bars, maybe looking at the charts, using drawing tools, looking at trends, implementing strategies based on those trends, how those can help you save money in the long run and get more metal for your dollar. So Frank, all of that is covered in the course after barter to currency called Protect Your Future. Of course, once you guys complete this course, you can sign up for it using the link in the chat. You take advantage of barter to currency, you get the foundation under your belt, then you can reach out to us and ask what the next step is, and it would be Protect Your Future. We could talk about how to gain access to that course and things like that. It is very robust. It's the most comprehensive metals education in the industry, and I certainly would commend it to you guys. It has benefited a lot of people over the last 10 years. So great question there, Frank. Terrell, you say that they said they have 2 trillion of Bitcoin, and now they say we can change the dollars, which seem to add 2 trillion into our economy. Yeah, I mean, if you sell or liquidate your Bitcoin, that money is going to flow into the economy in some form or fashion. And so that certainly exacerbates the issue. If that's happening on a broad scale, that exacerbates the inflationary issue, and all of that flows right back to the economy. The velocity of money picks up, and it goes into circulation and things like that. So great questions, everybody. I think we've covered the board so far. I intended for this to be about half an hour long, and here we are, about 50 minutes past the hour. And so if you guys have any last questions, feel free to throw them in there really quickly. But let me end with a couple of thoughts. This course, in fact, I'm going to, let me share my screen really quick and just show y'all the page that link will take you to. So this is what you'll see when you click on the link in your chat box. You can purchase the course. It's a lifetime access. It's a one-time fee for lifetime access to this course. You have 24/7 on-demand access. And this whole thing, again, is designed for laying that foundation, how to apply it, and but done so in a pretty concise manner. You can complete the course in a day. It doesn't take all that long, or you can take it in bite-sized pieces for however long you want. You can certainly do it at your own pace, but it covers a lot of stuff. One of the things that sets this apart is this particular course, as you can see here on your screen, it addresses a lot of points in history that play a direct role in your money and how your money is valued and why it's valued the way that it is, why it's as weak as it is. It answers the question, what is the health of your wealth, as I like to put it. And so this course is going to answer a lot of that for you guys. Again, you can click the link. It'll take you to this page. And as you can see, there's a whole lot of stuff on this page alone, some videos y'all can watch to learn more about the course before making that final decision. But you can ultimately, it even has some FAQs here at the bottom. You can ultimately sign up on this page. So go ahead and do that. Click on the link, save the link at the very least, and you guys can do that. Yeah, Creature from Jekyll Island is certainly an interesting book there, Jeannie. I have read it myself. It is fascinating. It is eye-opening, and that it's a very lengthy book. But for those of you that really want to kind of go down the rabbit hole like I did 10 years ago, after you complete this course, you can go start reading books like that, and it'll just kind of open up the full spectrum for y'all. Is this course free for master members, Robert? Robert, this is a brand new course, so no, it is not. It's not a part of any of the previously existing memberships or bundles that we have. It's $97, one-time fee, and it's the reason why it's valued so low, why it has such a low dollar value there, is for a couple of reasons. Number one, this is an entry-level course, so we want this to be as approachable for as many people as possible. Obviously, if they don't yet know the value of a metals education, something that is priced higher than that may not be attainable for them just yet. They don't even know why it could be so beneficial. So we valued this one lower for that reason. It's entry level, so that as many people can take advantage of it as possible. But secondly, so that it is more approachable and give you guys that at the bare minimum, a foundational piece to build your future metals investing upon. So it's not free for any members. Again, this is brand new. It is completely separate from any previously existing materials that we have. But click on the link there, Robert. Look into it a little bit. Think about it. Pray about it. And if you feel it could be a benefit to you and your family, I certainly believe that it could be myself. So with that being said, guys, I am probably going to go ahead and end this one just for the sake of y'all's time, because again, we're nearing the top of the hour now. But I greatly appreciate y'all's questions. They've been fantastic. I hope we were able to cover enough to give you guys just a solid idea of what this course is all about, how it can benefit you and your family. And if you have any follow-up questions that we weren't able to cover here, please reach out to me at preciousmetals@tradeway.com. Precious Metals, all one word, at tradeway.com. And you can reach out that way. But check out the link that is in your chat. Learn more about the course. Sign up for the course if you've prayerfully considered it and you feel it could be a benefit to you. And of course, I will be here on the other side to assist y'all along the way. So y'all have a good one. Have a blessed evening. Thank you so much for your time. And I look forward to seeing you guys again shortly. Of course, we'll be meeting with our prospectors here in just a couple of days. And so I'll be seeing many of you at that point. So with that being said, guys, y'all have a good one, and we will see you next time.